Once we get, 7 to 10 days past that period, I could easily see mid-October, up only, baby, Q4, into November and maybe December, and here we go.
As of now, Bitcoin's hovering around $120,000. Pomp foresees a rise pushing past that mark into late Q3 through September. This isn't blind optimism, it's rooted in the predictable rhythm of options expirations. Markets tighten ahead of them, and volatility often spikes or retreats in response. So expect a sharp run-up into late September. Then around 7 to 10 days past these expirations, price may flirt with downside, the classic blow-off top or consolidation phase. But this isn't the end of the story. It's the preamble to something biggie.
On top of that, what you are going to start to see is that the people who did buy Bitcoin and they were using certain capital, a lot of that capital was hedged, meaning people were going long the stock and they were short spot Bitcoin and they were trying to lock in the premium exposure. As those things get taken off, those hedges, you are going to see Bitcoin continue to rise in value. And so my prediction is the following, that we are going to see from our 120-ish thousand mark today, we're going to run in to the end of Q3, September. Why is September? When we get close to the end of September, you're going to have the options expirations all start to happen. There will be some volatility and likely potential downside pressure. Once we get, 7 to 10 days past that period, I could easily see mid-October, up only, baby, Q4, into November and maybe December, and here we go. So what you're going to see here is you are going to see the real start of what I would consider the second half of the bull market. It's going to start sometime either at the last 2 weeks of August or the first 2 weeks of September, sometime in that 4-week period. You're going to see a run up into the options expiration. You're going to see some relief that happens around the end of September, early October, and then you're going to see a much higher leg up in second half of October, November, and maybe even into December. And then where we go from there, I think, is a very interesting conversation, because I could see two different arguments. I could see, hey, 4-year cycles don't go away. There will be these drawdowns. It will be less volatile, meaning that you're not going to get an 85% drawdown. Maybe you get something more like a 50% drawdown in the bear market. But I also could see an argument where you are going to actually watch Bitcoin continue to kind of grow at this 45-degree angle, which has been happening since the ETFs got approved. And if that is true, that means that we now have broken the 4-year cycles. We have this persistent bid, and you should see Bitcoin continue to kind of grow in value. Now, the reason why I say either or, I don't have a strong opinion about that yet. I think we need to see more data to understand how parabolic is the move in the second half of 2025. If we get a lot of kind of explosive growth and it looks more like a parabolic move, then I would expect at some point us to get overvalued, overhyped, right? There's too much frothiness, and then you'll get somewhat of a larger correction because you need to get rid of that frothiness. If we continue this kind of grind up, which is kind of crazy. If you think we were at $70,000 on November 1st last year. So we've ground from $70,000 to $120,000, $50,000 per Bitcoin increase in price in less than a year. So if we continue this grind up, then you never get the frothiness. You never get the, exuberance and enthusiasm that then would create the scenario and environment to then get a big correction. So I don't know. It's like, which way, Western man? I don't know which way yet until I see what happens in the second half this year. But the faster and higher we go up, the more that I think we'll have the 4-year cycle and we'll get the correction. If we do not see that and we just continue the grind up.
So, what's next for Bitcoin? In the weeks ahead, watch carefully. The options flows into late September. The market's reaction. Will it buckle or consolidate? And then the move through October. Will we witness a textbook second half of the bull market or a completely new steady growth paradigm emerge? As always, whether you're a strategist, a long-term holder, or simply intrigued by the crypto evolution, one thing remains clear. This isn't just another rally. It might be the beginning of a structural shift.
If you increase the amount that it is for someone to bring their product into the US, then the person in the US who is selling that product is going to increase their price, which then will create inflation. But as people now are learning, you can't evaluate a single policy in a silo. the world. It's a complex economic machine. So for example, if you went back and you looked at the China tariffs, what you saw was actually there was only a 4% increase in the price of Chinese goods in America back in 2018. Why was that? The tariff was like 25% or something, right? Well, what happened? All these different people along the supply chain ate a piece of the tariff, so the end consumer was only 4%. So the second you realize that, you say, oh, this isn't an academic exercise, this is a real world analysis. And so the same thing then starts to say, well, what if consumers shift their behavior? What happens if interest rates are moving at the same time? What happens if they're printing money? What happens if there is some sort of technology advancement that actually brings down the cost of the product, even though there is a tariff? Let's say TV prices are crashing, but there's a tariff in place. What if the demand for solar panels is so exponential that people aren't going to stop buying the solar panels regardless of what the tariff is? And then all of a sudden the next president comes in and he changes the tariff on Chinese-made solar panels from 25% to 50%. Right? It's a big, complex economic machine. So go to Bitcoin. There's not one single indicator. You can't just look at money supply. You can't just look at interest rates. You can't just look at, let's say, a hash rate. You can't just look at OTC or exchange, number of Bitcoin available. You can't just look at social enthusiasm and like the social chatter. All of these things are data points. And part of what makes it difficult to be an investor in a very dynamic world like Bitcoin is if you are going to try to choose when to buy or sell, then you are going to have to constantly take in all these data points, synthesize them, and make decisions. It's very, very difficult. That is why the people in Bitcoin who have simply dollar cost averaged into the asset and said, I'm never selling, have done the best, because they're just, it doesn't matter what the data says. I'm going to keep buying this thing, and as long as it goes up over the long period of time, I'm going to be okay. So if you say to me, though, what are some of the data points that I think are most interesting to pay attention to? Maybe the data points that I would put more weight on, given their historical relevance. M2 money supply is obviously very important. Sam Callahan and Lynn Alden did a fantastic study, I think it's probably a year or two ago, where they went and they looked at the sensitivity of all of these different assets to global money supply growth. And what they found was Bitcoin was the most sensitive. So when global money supply grows, a lot of assets go up: Bitcoin, gold, stocks, real estate, etc. But Bitcoin goes up the most. It's the most sensitive to that growth. I don't think that that has changed. And so if money supply continues to grow as it has been, I would expect Bitcoin to follow that. Now, is it a perfect, you can pinpoint where it's going to go from a price standpoint? Maybe somebody can. I can't do that. I just look at direction. The second data point that a lot of people don't usually talk about, which I think is pretty important, if I remember it correctly, it is the 200-week moving average crosses the previous all-time high. So the previous all-time high was $69,000, right, in the last in the 2021 cycle. The 200-week moving average has been moving up. Last time I looked, it was somewhere around like $55,000. AI story, the technology story is making everything more efficient, so naturally they should get a higher multiple or a higher valuation. Bitcoin is a little bit different. Bitcoin does not have some huge tailwind because AI is now going to be like on the blockchain or something, right? There's a lot of tailwinds that are external to Bitcoin that make Bitcoin more attractive. But I think that what you have to start to really look at is say to yourself, okay, if a lot of the smart people in Bitcoin are starting to say, this is getting crazy now, one of two things is true. Either they're right, or I tend to think that revolutions don't happen overnight in financial assets. I tend to think that they are kind of this grind up. And I think what you're seeing now is that that's pretty much exactly what's been happening is Bitcoin has just constantly got this bid, and you see it, 401ks, those are coming. $8-9 trillion. Now we're going to be able to be put in Bitcoin. You obviously have the ETFs. You're going to have billions of dollars coming in from the Bitcoin treasury companies. I expect full well that the Harvard endowment, which bought over $100 million of ETF exposure, a lot of various endowments, hospital systems, insurance companies, private foundations, they're all saying to themselves, well, wait a second. I don't need to invest in these crypto funds anymore. I can just go buy spot myself, right? Maybe we should make it a 2% allocation in our portfolio. All of this is persistent bids on the asset. And so I think that is where you start to really just pay attention and say, these are the data points that are driving me to say Bitcoin is going higher over the next, 5 months or so.
Think about this. As recently as November, Bitcoin traded at $70,000. Now it's $120,000, a 50% leap in under a year. That's not just inflation, it's structural. If that trend continues, it reinforces scenario B, steady, crowd-pleasing gains without typical mania-induced extremes. Pomp emphasizes that evaluating Bitcoin isn't like checking one single metric. Bitcoin behaves similarly. You can't just pin its moves to M2, hash rate, supply on exchanges, or social sentiment in isolation. It's the aggregate of all these moving parts that shapes investor behavior.